How do you get a BECCS project off the ground? BECCS is short for bioenergy with carbon capture and storage. It's a technology that not only generates energy from biomass, but also captures and permanently stores carbon dioxide underground, creating negative emissions and paving a new path toward a more sustainable future. In October of this year, ERA co-hosted its first ever BECCS Leadership Summit in Banff, Alberta, bringing together over 100 key stakeholders to help advance BECCS in Alberta. The economics of BECCS projects are anything but simple. They're capital intensive, requiring significant investment in infrastructure, technology, and long-term maintenance. That's before we consider things like trading carbon credits, which can be a key incentive and big source of revenue for these projects. Understanding the financial mechanisms, navigating carbon markets, and ensuring the long-term viability of these projects is a challenge in itself. That's where early market investors come into the picture. We had the opportunity to sit down with Andrew Hall, Managing Director and Head of the Carbon Market Advisory at TD Securities, at the recent BECCS Leadership Summit, to better understand how banks like TD are stepping in to support BECCS and other carbon removal initiatives. Andrew helps us unpack how financial institutions not only provide essential funding, but also guide projects through the evolving landscape of carbon markets and sustainability investments. Here on Carbon Copy. Andrew, thanks for taking the time to join us on our podcast. It's great to have you here and great to see you here at the BECCS Leadership Summit. Maybe before we get started, can you tell us your name, your title, and the company you work for?
Yeah, thanks, Greg, and thanks to ERA for the invitation to be here and to speak here this week. My name's Andrew Hall. I'm the Managing Director and Head of Carbon Market Advisory at TD Securities. TD Securities is the investment bank within TD Bank. So we're primarily a North American bank with a global reach in the capital markets.
Can you tell us a little bit more about TD as an organization and maybe a little bit about the work that you're doing with TD and maybe its interest in this kind of emerging space of carbon removals?
Yeah, sure. So TD, it's Canada's second largest bank. It's been around for well over 100 years. And within TD Securities, again, the investment bank within TD Bank, the area that I'm focused on is carbon markets advisory, which is really an umbrella term for environmental commodities. So not only carbon, but renewables and fuels and so forth. Though we do spend the majority of our time, at least these days, focused on carbon markets and specifically the voluntary carbon markets and then the compliance carbon markets. As you might imagine, just given the nature of the Canadian economy, a lot of energy intensive industries that are covered by various compliance programs across North America, but also Europe as well. So we do spend a lot of time with those types of clients who are exposed to these programs, including the TIER program here in Alberta. And they are, faced with a growing compliance obligation. Whereas, historically, the price that's been on carbon, and that's true here, and it's true in other geographies that have these markets, it hasn't necessarily been overly material, and so compliance hasn't been an area of particular focus. Again, it depends on the company. Some companies it has been, some companies it hasn't. But broadly speaking, that's been the case. That's changing quite quickly, right? Here in Canada and in Alberta, the price or the backstop price is $80 a ton, and that's planned to go to 170 by 2030. So if you're a large emitter, that becomes an increasing cost line item for you and an increasing area where you're looking to help manage that exposure either through emissions reductions or use of some of the flexibility mechanisms that are available within the market. So we spend a lot of time working on that. We also spend time working with companies then that are looking to raise capital for technologies to help reduce emissions. So BECCS, case in point for this week's event, talking to lots of the innovators in this space who are at different stages of development and commercialization and have different needs across the sort of Series A and up, capital needs. And then we also work with some institutional investor clients who are looking to invest at different points in the value chain. That could be developers like the BECCS developers or other CDR developers. It could be firms that are developing the backbone of carbon markets, so the trading infrastructure, for example. And then the other area is just increasingly with companies as it relates to more traditional capital market type transactions, where again carbon is becoming an increasingly important consideration when it comes to M&A activity, for example, in energy intensive sectors, where firms want to know and incorporate into the valuation what is the cost of carbon now, what is the cost of carbon going forward, how can we mitigate this cost or optimize this cost, such that it doesn't become overly punitive to the economics of the business or the valuation of the business. So those are sort of the three areas where we spend a good amount of time. And it's the market is growing quite quickly, particularly on the compliance side. And I think the expectation is that on the voluntary side, it's going to grow very quickly in the future. It's probably experienced a couple of really quick years of rapid growth in sort of 21, 22. It's, I would say, plateaued right now, and people are just sort of looking for that next leg of growth. And that next leg of growth will probably include a lot of the CDR technologies that BECCS, but the other DAC technologies and ocean alkalinity enhancements and mineralization and just the whole range of technologies that are out there and available in the market, and that innovators are looking to commercialize.
That's great. It sounds hugely complex. There's certainly a lot going on. And a little bit of what you offered there segues nicely into my next question, which is, in your view, why is this BECCS Leadership Summit and the timing of it now an important event in this emerging space? It seems like, just given from what you described, the timing of the conversations that we're having here this week seem to be quite sort of optimal.
Yeah, I think that's the case for a couple of reasons. First, I think some of the early stage projects, CDR projects and BECCS projects that are out there are rapidly coming to commercial operation. And I think that's going to provide a strong signal to the market, hopefully, that the technologies work, that they work at scale, that they meet their nameplate capacities, that they can prove that they're on a learning curve where that cost per ton is going to steadily decline, because that's going to be really important to appeal to a more mass market buyer, as opposed to purely or largely tech companies or financial companies that have to date largely been the buyers. The other thing too is I just think it's important that innovation occurs now, given the timing of where we are relative to the targets that sort of the global community has agreed to under the Paris Agreement. Right, we've got this window where we need to start to not only reduce the emissions that are entering the atmosphere, but also start to, I think the general recognition is that some of that's going to have to be extracted in order to keep on track for 1.5 or 2.0 degrees rise in global temperatures. So, and all these technologies are going to take time to incubate, time to prove out the business model, the economics, to debug, if you will, and again, commercialize them. And at the end of the day, deploy them. I mean, these are large industrial projects. They take multiple years to, once and assuming you can get the financing, multiple years to construct and then operate.
And I wanted to maybe just build on a little bit about what you were saying, looking to achieve, global targets when it comes to emissions reductions. What do you see as the role for carbon removals and particular BECCS in this broader energy transition? And, I think what we heard today is talking about a lot of work has been done on emissions reductions, but increasingly there's this need for now carbon removals. Can you offer a little bit of perspective on what you see as that role for BECCS here? Maybe in the short term and maybe also in the longer term?
Yeah, so I think in the short term, I mean, BECCS appears to be the most, or one of the more de-risked technologies, and so potentially deployable, and importantly, and to my point earlier, relatively speaking, cost competitive at, call it, $200 to $300 a ton versus some of the other technologies then that are at higher price points. So if you sort of, buy into these marginal abatement cost curves, you want to start with the lowest cost reductions or removals first, and then slowly work your way up to the more expensive, removals or reductions within the economy or within a company. So, I think a lot of the technology is well understood. I think you have, partial deployments, like you have a lot of the pulp and paper companies and timber companies, for example, that are already consuming biomass to produce electricity. So in this case, it's bolting on that capture equipment and then subsequently storing it. And here in Alberta, as we heard, over the course of the day, a lot of biomass, big timber industry, very sophisticated, very mature industry, reasonably well capitalized, such that they're probably in a good position to help backstop and or partner with some of the companies that are developing the technologies. So I think it'll be an important technology amongst a range of different CDR technologies to, help put us on a lower emissions or lower CO2 intensity pathway.
I agree. That's something I picked up in the conversations today too, is that pulp and paper mills are so well positioned because also they've largely, or the logistics around moving that fiber has already taken place. Now, we talked a little bit about projects, the role that BECCS could play. What role do financial institutions like TD play in scaling these kinds of projects, these carbon removal projects?
So there's a couple of different roles then that we can play. I think at the early stages, I sort of mentioned it in my opening, that we work with investors who are looking to get exposure to some of these early stage technologies. I wouldn't say that's our core focus, but certainly we can connect dots between those with capital and those seeking capital. So that's important. We can also be early off-takers of offsets when you look at or credits of CDR credits and BECCS credits. We have been active in the space. We announced last November an offtake with 1.5, which is a CDR technology, a DAC, direct air capture technology, not BECCS, but a CDR technology nonetheless. So we can play a role as an early mover there, sort of, putting our money where our mouth is as it relates to emissions reductions and putting ourselves and our own business on a low carbon or lower carbon trajectory. And then once these technologies start to mature, once you start to get commercialization of them, you start to see commercial deployments of them, then you really get into a more traditional model whereby we can help companies then that have these technologies that are now ready to deploy them at scale, provide them with more access to traditional capital, whether that's fixed income or equity, or at some point some of these companies are likely to go public potentially as well. Project financing, again, these are not next year or the year after, but there's a path there where you can see them being able to access traditional capital markets. And so I think that's the role that TD certainly is intending to play via our early stage involvement in this market and support of companies therein. And I think, also too, it provides a certain amount of credibility to some of these early stage companies where we do enter into offtakes. It's sort of a vote of confidence that we think that this technology versus others that might be out there and that they're ones that we have our eye on and ones that have a reasonable chance of succeeding, both the technology and then the commercial model that those companies are deploying. And it's not to say then we've only done one. We're exploring other opportunities as our peers are. Lots of interesting technologies out there, lots of innovation occurring, and I think for us that's the really exciting thing, and it makes us think then that this is going to be a space that is going to be a significant and important part of Canada's Alberta's economic growth going forward, but also in the decarbonization of economies.
It's so interesting to hear that, because we often hear that capital is hard to come by. And, just hearing you speak about, the areas of interest for TD, it sounds like, it does require a bit more of a risk appetite, I suppose. Would you say that that's something that's shifting a little in the traditional financial institutions, being willing to take on a little more risk?
I don't think that's necessarily the case. Like right now, you're still going to see most of the investment into a CDR company, a BECCS company coming from a certain segment of the capital markets that is it's venture capital, more or less. Right, you see in some instances, like with 1.5 being backed by Oxy, you see some strategics coming in. You see that with some of the oil majors, that there's some strategic money coming in, and frankly, that makes a lot of sense, right? When you look at, again, I made that point earlier, that these are big industrial projects, both the construction to build them, but then also the operation. Oil and gas sector is, that's kind of what they've done for a long time, and they're very well versed in doing that, and excellent operators as they need to be, but they also have that experience with subsurface geology in many instances. When you actually capture the CO2, you then need to do something with it, both transport it and store it. So I think those strategics play an important role in the early stages right now. Lots of complementarity with CCS or CCUS technologies that are already being developed. Long way of saying, The appetite within banks, I don't think, has particularly changed. They will enter into, off takes here and there. And again, you've seen us do it. You've seen a lot of our peers do it. But it's really once that maturation of the technologies has occurred and they're ready to, roll out at scale with proven business models and proven demand from the market, that's where I think you'll see the banks and just, capital markets generally step in, at the scale needed to get these big projects off the ground and built.
Industrial scale carbon capture. North America's first hydrogen-powered locomotives. Using drones for reforestation. Since 2009, Emissions Reduction Alberta has been helping to deliver on the province's environmental and economic goals by investing in projects just like these. Projects that pilot, demonstrate, and deploy clean technologies across our industries. Whether it's detecting methane from space, producing biogas from Alberta's agriculture industry, or one of almost 300 other projects in our portfolio, ERA's investments in these game-changing technologies are reducing emissions, lowering costs, attracting investment, and creating jobs right here in Alberta. ERA's funding is sourced from the Government of Alberta through the Technology Innovation and Emissions Reduction, or TIER, Fund, which is Alberta's provincial industrial carbon price. For more information about Emissions Reduction Alberta, visit eralberta.ca.
And Andrew, what are some of the most exciting developments you're seeing in carbon dioxide removals? This event this week is specifically on BECCS. What's really exciting you in this space?
I think just that it's such a big part of the conversation right now about how we decarbonize economies, right? Like 3, 4, 5 years ago, this was, from my perspective, you kind of had it, you heard sort of sound bites, here and there about extracting CO2 from the atmosphere, for example, or capturing it from, biomass combustion and storing it. But now it's very mainstream, right? And that's exciting because I think it has to be that in order to attract the capital that you need for the innovation that needs to occur in order to prove out the technologies, to de-risk them and show that, again, they work at scale. And then ultimately to attract, like, these need a lot of capital in order to get built. These aren't, small projects that can be undertaken by, they are being undertaken by startups right now, but once they get going, right, it needs large amounts of capital. So either these companies are going to grow very rapidly, or they're going to consolidate, or they're going to get bought out. So I think that the innovation necessary to make these technologies work is occurring, that there's so much focus on it, both from the private sector and the public sector, groups like ERA that are looking to help, catalyze CDR and BECCS in general, looking for ways to create additional value for existing industries like the forestry sector. and getting everybody involved, right? I think this isn't something then that startups can do alone. They're going to need partners, and they're going to need facilitation to make the connections with those different groups. So I think that's the most exciting thing right now is just that overall focus on CDR as a technology, and trying to find ways to make that work and make it work quickly and make it work at scale.
You're so right. There was definitely a theme for me too in the last few sessions of today is the broader conversations that are taking place, groups from different sectors needing to collaborate, and really about partnerships and finding the right people that can help you move a project forward. So it's a fascinating conversation taking place. Is there anything that you're hearing in today's conversation that is particularly pleasing for you or maybe even surprised you?
I mean, the interest of the forestry sector, which given its BECCS makes a lot of sense, perhaps hadn't fully appreciated how engaged they are or how willing they are to engage in these opportunities, and they are engaged because it is an opportunity for them, right? Sort of diversification of their business model and revenue stream. So perfectly logical. So I think that's great, and it goes to the point I just made, right? All the different stakeholders who are involved and or looking to get involved. I think the government representation here is maybe not surprising, but good to see that reinforced because, like a lot of new technologies, that government backing is important, right? It's that concessionary capital that needs to come in at the early stages and pave the way for private capital to move in, either as a fast follower or at scale again when these technologies are de-risked. In terms of other things that have surprised me, it's just a very, this is a smaller conference, very focused, and just the level of engagement is above and beyond. Typically in conferences, it's, you have people talking at the front, and I think in this event, perhaps because it's smaller, you just have a lot more engagement from a lot more folks, and I think that's fantastic to see. It just makes it a lot more interesting conference. So that's been a surprise as well.
That's great to hear. And, organizers, we're happy to hear that because that was by design, is really to try and bring a select group of people around the table to really have a robust conversation about, what are the opportunities, but also what are some of the challenges and what are the things that, different groups need to know about. I think one of the things I've really, taken from today is just how much everybody is learning. Nobody comes into the day knowing everything or is an expert on everything. And so it really means drawing on the expertise of so many different folks. Maybe, my last question for you, Andrew, is, we may cover a little bit of what we've talked about already, but, in maybe summarizing, what role do you think Alberta and Canada can play in advancing BECCS in a global context?
So, we heard it today, clearly. It's hard to find a better geography than Alberta for these types of technologies, right? With the oil and gas sector and their expertise in the operations and the transportation and the subsurface geology. I mean, that's table stakes, really, if you're going to build an industry. The government, providing the incentives, whether that's sort of investment tax credits or support through a robust carbon price like we have here in Alberta, and ensuring that there's regulatory stability. One of the things that you hear a lot, and this is in the CCUS conversation, but certainly applicable to CDR and BECCS, is regulatory instability is a killer. So if, for example, the price, which is now planned to go to 170 by 2030, if that comes into question, that significantly impacts the economics of some of these projects, the BECCS projects, right? They're already close to being economic, and if there is a let's call it $150 carbon credit that they're able to monetize in the market, it makes it, again, a very attractive market to build that project in. If you can sell that into a compliance market, that's even better, just because you have a certain amount of certainty in the demand for that product that you don't necessarily have in a purely voluntary market. So I think that regulatory stability and making sure that is not called into question by those who might be looking to invest in projects in the province is really, really important and can't be understated. So I think those are some of the biggest advantages then that Alberta has right now. I mean, we heard people mentioning just the not only the companies that have that, but the people they're in, right? You've got people, as it relates to BECCS, you've got a strong forestry sector and expertise, human resource expertise that comes with that, which, when it comes to building a project, when it comes to operating a big industrial project, again, all important resources to have in the region that companies are looking to invest and looking to build. So Alberta makes sense and ticks a lot of boxes for a company looking to deploy capital in a project in this sector, and I think that's why we see so much interest here in Alberta.
Andrew, thanks for taking the time. Some really great insights from you on the opportunity for BECCS. I too have enjoyed the day's conversations. I think I've learned a lot, and it seems like it's been a productive day for a lot of people. Thanks for joining us, and really appreciate your insights.
Yeah, no, thanks again for the invitation, and really enjoyed the event today, and look forward to it tomorrow.
Thank you.